Hi, this is Roger Conrad. I'm editor of Canadian Edge. Thank you for tuning in today. What I want to talk about is the impact of what is really the biggest development in the energy producing world, the merger of or the takeover of a gas company, XTO, by Exxon Mobil, just recently announced, and the impact of that in particular on oil and gas producer trusts. Obviously, I've been pretty bullish on this group. If you look down the list of the companies that we cover, it's most of what you see in there are buys. In a few cases, the unit prices have trended above buy targets, but I'm pretty bullish on the group, and for several reasons. One, I think the group that you see in there has really weathered the storm. Probably one of the worst to affect any industry, certainly in the last several decades. But starting with the 2006 announcement of trust taxation, which basically dried up capital markets for these firms. They had to learn how to live within their own means. Then we had some tremendous spikes in energy prices, finally followed by the tremendous plunge that we saw in the price of oil, and particularly natural gas, starting in the middle of 2008 and running really into the middle or early part of 2009. And these things have reflected, these share prices of these trusts reflected that, really nosediving and not bottoming until the early part of March of this year. But the other side of that coin, the other side of that very painful experience is that they have proven beyond the shadow of the doubt that they can function in very, very difficult environments, living on their own resources, responding to difficult market conditions. Not all these trusts survived, but those that have are pretty hunkered down. If you look at the payout ratios, which measure the distribution as a percentage of the distributable cash flow, they're all pretty bullish. And in fact, a number of these trusts are saying that they will be able to maintain their distributions even with taxation, again, providing the energy price environment holds up. So energy prices are very, very critical for these things. They always have been. I think for this next year, energy prices will be extremely critical. One, for determining how much cash flow they can generate, and then and two, then from that cash flow, what sort of dividends they come up with when they convert to corporations, which pretty much all of them will do by the end of the year. We've already seen a couple of painless conversions. One, the best example being Crescent Point Energy, which converted to a corporation, held its dividend the same, and the shares are up roughly 50% from the pre-announcement price. So pretty nice gains in that one. We've also seen a number of trusts make the conversion and completely gut their dividends or completely eliminate them, and that would be the case of Advantage Oil and Gas earlier this year, and later True Energy, which has converted into a company called Bellatrix Exploration, which doesn't pay any dividend. The common denominator of these things really is that the ones that kept the dividends are very heavily weighted to oil. Those that cut, very heavily weighted to natural gas. Natural gas prices have obviously been much weaker than oil prices. In fact, we didn't see gas really bottom until a couple of months ago. Well, this Exxon deal, I think, is very positive for that in a couple of ways. One, it affirms that probably the premier non-national oil company in the world, certainly a AAA credit, being one of the strongest entities of any business out there, has affirmed a bullish posture for natural gas going forward. That's partly due to the fact that they look for some dramatic increases in new sources of gas, such as, or new uses for gas rather, such as more use for electric power as backup for renewables, also as a way to cut carbon emissions. The company Progress Energy, for example, just announced that they were going to be shutting 11 coal-fired power plants and replacing that with natural gas. So that's obviously entered into their calculations. Also, the very low price of gas, and also the fact that particularly the kinds of things that XTO has been doing, which are in non-conventional sources of gas, and the fact that this is an extremely fast-growing area, and there are tremendous numbers of new sources that have been discovered in this area. So it's a recognition of all that, and I think more than that, even perhaps that there's some tremendous value out there among some of the gas players out there. We've noted some of the other deals that have been taking place, companies, some trusts focusing on, say, the Montney Shale area, such as Advantage did, Arc Energy doing a couple of deals, increasing its shale gas, Interplus taking a major stake in the Marcellus Shale region in some properties in the United States. So some of the trusts, lining up to get some of this gas. But anytime there's a takeover in the area, you tend to see some nice action that follows on. Certainly, Exxon taking over Mobil in 1999 ushered in some big deals in the energy industry in the United States. We've seen a couple of takeovers of oil and gas trusts in Canada, Harvest Energy being one. And that deal just being recently approved by shareholders. And this deal could very well usher in something similar in Canada for natural gas producers. So that's very bullish. I think also the fact that, again, a bullish call for natural gas going forward may take some patience. We certainly have very high inventories right now that need to be sucked up. There's a lot of production out there. There's a lot of idle capacity. Given the drop in gas prices. But this deal is definitely bullish for the gas producing companies, even as they enter a year which should be bullish anyway, with the economy coming on, some more industrial usage of gas and oil, and then again also the conversions to corporations, which should exceed expectations. So I'm going to have a major article on the oil and gas companies that'll be appearing in the January issue. In the meantime, again, very bullish on a lot of these issues. I'd also invite you to take a look at the oil and gas reserve life table, which is posted on the website. Has a lot of details about the individual companies that we do cover in how they rate in Canadian Edge. So that's all I have to say today. Again, thanks for tuning in. Look forward to chatting with you next time.